The market just wallowing in the mud down here today after yesterday's bloodbath. The S&P closing down 0.09%. We're bouncing up against our lower dealer cluster zone. We can see the largest gamma exposure concentrations are on the negative side between 5,800 and this 5,865, which we closed at today. And if we just zoom out here on our chart, you'll see this major level that we're at. You got to go back to basically into October, but look at this level that we're at, and it coincides right with our lower dealer cluster zone. This 5850 to 5865 zone is a major area of support. So we could see just a slight further dip down here into this zone, but I think if that breaks, further downside is coming 5,800 and lower potentially. Of course, a bounce here could see a setup for that year-end move that we've been talking about. However, we need to get back above this zero gamma level, which is currently sitting at 59.25. So a move back above that level would see some of these gamma effects at higher strikes start to kick in and pull us higher. We did see volume coming in at the 6,000 strike, so that's something notable. Over 200,000 contracts were traded at that strike today. And again, price was trading nowhere near the 6,000 level. So that's something interesting to be watching. Another point I wanted to mention is that we did dive into negative GEX territory. That should not be a surprise to anyone after yesterday's trading session. And we actually closed even a little bit further down into negative GEX territory today. So definite shift happening yesterday and today in the market overall. And let's just take a look at our GEX data graph. Our GEX weighted volatility gauge is sitting at 96.4. That basically means implied volatility is higher than 96.4% of readings the past year. So this is quite an extreme on a relative basis over the last year. We can see that we're nearly negative 1 billion in gamma exposure. And so while this is not an extreme level in terms of the GEX structure, it is an extreme level on a relative basis in terms of implied volatility. And that's why we have these two gauges here to basically help us identify when we're at an extreme, either from the GEX structure perspective or from an implied volatility perspective.
Anthony, I wanted to point out a couple of things about the VIX today. It was up again. However, we did not yet make a new high. You can see yesterday we reached over 27, and today we're quite a bit lower than that. However, one thing that we had commented on was that the upper Keltner channel on the weekly chart is at 29.5, way up here. So that wouldn't surprise me if we did see the market drop a little bit more, that we see this volatility spike to a new high. When the VIX spikes, it can be fairly unpredictable because it's such an emotional, fast-moving change that happens. But these Keltner channels still can give us some clues. And I also wanted to point out that long volatility is basically my bias as long as we're above the whole moving average at 1792. And you can see each time in the past, it wasn't really until we broke the hole each of these times, it kind of makes that point evident. It wasn't really until we broke the hole to the downside that we really saw the VIX come in. So as long as we're above this pink line, and with gamma kind of backing this view, I'm going to be looking at the market with sort of a skeptical eye and risk aversion.
Yeah, the last couple of days has definitely been risk off. You know, one of the tickers that a lot of traders look to determine risk on or risk off is MSTR, as well as the crypto market in general. MSTR is actually one of the new tickers that we've added to our coverage. We've added 500 new tickers to our GEX dashboard, and MSTR is one of those tickers. So let's just take a look real quick and see what the GEX data is telling us. We had this huge run up right after the election basically through November 20th. MSTR doubled from 250 to piercing above 500 in just a matter of days. Crazy move. And now we've basically come back down to the 350 zone and have been bouncing. Obviously, this is a very volatile name, down 5.32% today alone. And we've got this zoomed out view here. You can see our top three largest GEX levels on the positive side and our top three largest GEX levels on the negative side. What's interesting is that we basically have a concentration of both positive and negative GEX down here between 300 and 350. This was obviously a big part of the breakout as we crossed above the 300 threshold. We came back and tested the 350 multiple times, and now here we are again. So this is going to be an interesting zone. I think there's going to be a lot of contention here as traders are trying to determine what the next move. Are we going to bounce higher, or is this going to break down? And if we just come down here to our GEX data graph, you can see we're basically in no man's land in terms of the GEX structure. We've got large GEX concentrated at the 390 strike, and then we've got this essentially this congestion zone between 300 and around the 330 level. So trading at 331, this is an interesting area. Potentially from a risk reward perspective, anywhere in this box could be interesting for a move higher with stops below 300. So that's something that we're going to be watching in our community Discord.
Thanks, Anthony. I'm going to take a little different approach today. As the market sells off and we're left with a lot of companies showing negative gamma and maybe not looking as bullish as in weeks past, I'm kind of gravitating toward finding the names that are just absolutely so oversold that they get to a point where the negative gamma might be a contrarian signal. And so I wanted to look at LQD. That's the iShares investment grade corporate bond ETF. It was so overdone on the daily Keltners, I had to zoom out to the weekly chart. And you can see this lower Keltners here at 105.62. And we're barely 1% away from that at 106.56 currently. The chart definitely shows it to be oversold. The Keltners are also in an uptrend ever since that October 2023 low that you see way back here. So LQD lost the trend line that we could draw from here. And I'm just going to roughly draw it, going up through here, and pretty good follow through to the downside since then. We are close to this lower Keltner. The gamma picture looks interesting as well. We are in the lower dealer cluster zone. We have high volume here at 106 and big clusters at 107 and 106, and we also had some volume at 115. We are at an extreme low point, and when we get to these extremes, we found that these circumstances can lead to powerful reversals in the other direction. I also note that we don't see very much interest in lower strikes based on the gamma picture below 106.
Yeah, LQD definitely one to watch. Thanks for that, Sean. Next, I want to take a look at Apple. Apple trading around the 250 strike. We've been hovering back and forth over this zone for the last few trading sessions. This is the largest GEX level at 250. We see continued volume coming in as well at the 250 strike. We do have GEX growing at 255 and a little bit at 260. If you recall from our videos a couple of weeks back, right after Thanksgiving, we highlighted the possibility of a move higher into these larger GEX levels, and we certainly got that move. We also noted that according to our cash flow model, Apple's fair valuation is between 245 and 250. So target acquired, we've reached that level both from a fundamental standpoint and a gamma exposure standpoint. Apple is hanging in here pretty well considering the broader market sell-off. Based on the gamma exposure data, we expect Apple to hang around basically between 248 and 255 over the next couple of weeks. And these are the kind of setups that we like to see when we're implementing theta decay strategies, premium collection strategies. And by the way, if you're interested in upping your trading strategy, head on over to geeksoffinance.com. You can get access to our gamma exposure dashboard and our option flow analytics tools. You can also follow along as we manage our geek portfolio. You'll also get access to our Geek University course, which is a 5-hour option strategy, gamma exposure, volatility focused education course, which is included for free for all members. I'll put a link down in the description below. Also, don't forget you can check out our community Discord, also absolutely free. I'll put a link in the description below for that as well. Thanks so much everybody for watching, and we'll see you guys in the next video.